Hey everybody, welcome to My Trading Game Plan, live from the Money Show. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, as always, in my game plans, we're going to go over charts. Remember, no BS, just charts, folks, going with probability over hype and narratives. All right, so as always, we're going to discuss what's going on. Number one, you have this fear of a banking crisis accelerating. Yesterday, two banks basically coming out and saying they're having major losses. Just the day before, Jamie Dimon said to all of us that there is likely these issues out there, and where there's one cockroach, there's many. So all of a sudden, the markets are getting something that was not on their bingo card as a potential risk, and we saw the markets selling off yesterday, and early today, the futures were down sharply. However, Trump came to the rescue. He once again tweeted that 100% tariffs are not sustainable on China. The markets have rallied back to basically the flat line just before the open. So let's get into it. Let's take a look here. What you see behind me is the S&P futures, right? So again, the S&P futures, this was yesterday's down day here. Overnight, you can see we started to come down more and collapse. And then this is where we got that news right here, or that tweet, and the markets just came rip-roaring back to the upside. So again, overall, markets are still struggling. Remember, we're going to look at the S&P in just a second, the daily chart, and look at where we are on the chart basis on the wedge pattern. In fact, we're going to jump to that right now. So here's a chart that we've looked at many times over every single day. Now, one of the most important things about this is we've had this wedge pattern that's been intact for months and months and months. And we can see that every time we hit these lows, what's happening? We're bouncing back up, right? And down here, up here, when we hit this upper trend line, it's rejecting price. And so this gave us a very good basis to monitor the markets to see when we break down. And ultimately, that happened a week ago from today, last Friday. We got this massive red bar candle. Now, what that does here is, number one, that does a ton of technical damage. But number two, it broke the line, but it has not confirmed a breakdown just yet. To confirm this breakdown, what do we need? We need a daily close below the low of that candle. And the reason why I use the confirmation signal, folks, is because when you close above or below a trend line, like let's say we're above here and we just close below, how many times have we all been in the situation where we're like, oh, it's going to break down, let me exit my longs, maybe short the market or short the stock, and then what happens? It goes right back up, and before you know it, we're just rallying back up. And essentially, you get faked out. And so the idea behind confirmation is once you get a confirmed breakdown or breakout, the odds of it being successful in that direction go up to about 75 to 80%. And so that's what we're looking for here. All right, we still haven't confirmed, but as I've explained in previous game plans, we are still in a warning zone. So anytime you get below a key trend line but don't confirm, I wouldn't be like, oh my goodness, this market's collapsing. But you need as a trader to go into a warning atmosphere, meaning like, all right, let me be more on alert. Let me heighten my risk level here because we are below that trend line. All right, you can see what's happened, right? It's amazing to watch this, how we closed below, we rallied back, and basically for 3 days, we've hammered on the underbelly of this trend line. Now, when you don't confirm below a trend line, it's minor resistance now. Once it confirms, it becomes major resistance. Okay, so right now we can see very clearly we're starting to kind of make what I would consider more of a bearish flag pattern below this level, still unconfirmed. If it starts to break down, for instance, where we were trading pre-market overnight, we would have been very close to confirming. We'll have to monitor this over the next few hours as the trading day goes to see if we confirm a breakdown. If you confirm the breakdown, what does it mean? The odds of this being a major market top go up substantially, and the odds of us going down significantly also are raised substantially. And just in terms of talking points, I would be looking for around 6,100 on the S&P if we confirm below this 6,550 level on the S&P 500. All right, let's come back here, folks. Take a look at the next chart. The same thing can be applied to the chart of the QQQ. Now, I'm going to keep this one a little bit more zoomed out, mainly because I just want to show you guys where we currently are. So this was your April 7th low, and the whole way up, we kind of hit it, and finally we broke. But same thing applies. You're chopping inside of that wide range, unconfirmed breakdown right now. So you're on alert, you're on warning, on notice. But until we close below this low, you're not going to really say, okay, odds heavily, 75, 80% chance that we've really made a top in the market, and that's when you would expect that bigger collapse to the downside. All right, continuing on here, let's take a look at the 10-year yield. Now, sure enough, the 10-year yield fell yesterday. This is the weekly chart. Notice this trend line on the weekly chart. We have this low going back to, this is going back to 2022, right? So 2022 low. It perfectly aligns with this low here in 2024. We then go to this low in 2025. That was in January of 2025. And look, we hammered on it, consolidated, and are now breaking down. Now, the difference maker here is that if I zoom in on where we currently are on the charts, on the 10-year yield, what do we know? We closed below, and as of now, if we close here, this would be a confirmed breakdown on the 10-year. Now, what does that mean? It means that ultimately yields are heavily favored to continue lower, probably 3.6 to 3.3%. Now, a lot of us would say, okay, this is great news, the market should go up, right? Not so fast. All right, in general, yields falling likely means in this scenario, not that the Fed is cutting rates extra, or if they are, it means that we're seeing essentially a much weaker U.S. economy. All right, so if yields are really going to break down here, it's likely because the economy is weakening, which isn't so good for stocks because a weakening economy means weaker consumer spending, and weaker consumer spending means corporate profits are likely going to fall. Now, granted, you could say, hey, what about AI and all the spending, the CapEx? You're right. In all fairness, that probably goes on. These companies are willing to invest hundreds of billions, if not trillions, into this CapEx spending spree. But again, at some point, we all know the round robin of kind of the Ponzi of, hey, you give me this, I'll give you chips back, vice versa. You're essentially AMD paying for their own chips, Nvidia paying for their own chips with some of these deals with OpenAI. We know that's not going to last forever, and the market's not going to be okay with that forever. All right, continuing on here, Nvidia, this is one of the most important charts to look at. Number one, I'm going to start with this way zoomed out chart here. And again, the reason I'm starting here is just to show you how far back a trend line can go. So this trend line goes back to 2021. That's the bull market high. Now, what's amazing is this high on Nvidia was the bull market high in 2021. What amazing and again shocking is look at where it is now, right? Look at where Nvidia is now. So it shows you that during the bull market, this was a great play. I mean, it went up a ton, but it's still nothing compared to the run that it's had. Now, on that same note, notice how that high matches perfectly with this high, and that gave us our exact high on Nvidia right up here. And so the idea is trend lines can guide you to making sure that as a trader, you're making decisions on where tops and bottoms are, not just by guessing, but actually with a fundamental factor behind it, right? And again, there's no, by the way, in all fairness, no guarantees that you're going to be 100% right 100% of the time. In fact, I guarantee you won't be. But at least you have factors that give you the odds in your favor, like a casino versus the gambler, okay? And I think that's one of the most important things here. So if we zoom in on Nvidia, what are the factors here that we're watching? Well, just like the S&P and the Nasdaq, Nvidia has closed below. This is your April low, so the liberation sell-off low on Nvidia. We have our low pivot here, here, and here. And here's your close below. Now, a couple days ago, all right, 2 days ago, we were below and looking like it was going to confirm. And in the last 3 minutes of the day, volume came in and pushed Nvidia up. It's so hard to see here, but it did not close below that low. So it got saved from confirming a breakdown. Yesterday, it was up a little bit. Today, let's watch and see. Could Nvidia, which to me would be a major knife in the market, right? If this were to confirm, we can all agree that $4.5 trillion of market cap, basically 10% of the S&P and like 15% of the Nasdaq 100, this would be huge if it confirms to the downside. Interesting to see if the S&P and the Nasdaq also confirm if Nvidia does. Now, having said that, the SMH, it's not even close to confirming. So the SMH, remember, this has a bunch of other semiconductors, AMD, Micron. These have been on still amazing runs, basically trading at all-time highs. And so the next thing you're watching is to see, okay, well, the SMH has the same formation, right? All these charts match up. Here's your high, and if you go back, by the way, this goes back to the 2021 highs as well. But you can see we're not even close to this bottom line on the S&P or on the SMH, the Semiconductor ETF. So yes, Nvidia could trigger, and that would be a huge issue. But you also, if you're really saying, okay, this market's on the verge of, let's say, a 10% correction or 20% correction, you need the SMH to drop as well. The whole semi-index has to essentially start to break down. That'll enable the markets to really go into panic mode and send us much, much lower. Couple stocks in the move today. We have American Express, which is up on earnings just a little bit. They had good earnings. Notice the stock's not really ripping up. It's closed yesterday somewhere around the 322 level. It's now trading around 329. So it's up about $7 on the day. The kicker here is this is a high-end credit card, right? And so we're seeing that investors, and this is something I've said, we have the two classes of citizens right at this point. We have people that have lots of investments in the market where they're like, oh, I can continue to spend and buy whatever I want. Inflation is no big deal. And then we have, obviously, everyone else. If you don't have a lot of investments, inflation has crushed you. All right, the American Express favors the upper middle income, and they did okay on their credit card stuff. But remember, folks, if you're talking about these banking crises, these are bad loans. If you're talking about the delinquencies on credit cards overall, highest since 08 and 09. I mean, these are all signs that a massive group of Americans are struggling. It's just the high end is still carrying the load of consumer spending, and obviously AI, CapEx, is doing the same. A couple other charts I want to go over real briefly here. We got to talk about gold. All right, gold, which is basically flattish today. Overnight, it surged near $4,400 per ounce. Now, the charts I have up here are very cool. Number one, this is your 1970s, so 1979 surge. This is your current surge, right, on the weekly. Both charts are on the weekly time frame, so this is 1 week and this candle's 1 week. Now, we can very clearly see that you had this initial move up, consolidation, and then this move up here. And then same thing over here, initial move up, consolidation, and surge. Now, as I pointed out in yesterday's My Trading Game Plan, the beauty of this is that we had 9 candles to the upside here on the weekly, all 9. Every candle was an up week. So 9 straight weeks. And what are we at over here? 9 straight weeks. So we're really seeing some symmetry between the 1979 move in gold into 1980 and the current move in 2025. Now that leads me to believe, well, what happened here following the 9-bar surge on gold? And all we have to do is just bring this out a little bit, and what we can see is that gold had a big correction. In fact, it put in a cycle top. I was going over this morning, and I don't think gold is going to have a cycle top here. I do think it's due for a pullback, and I do think you're going back, maybe 10, 15% drop on gold, but the idea is, at least in the 1980s, they started to implement in things that curbed inflation, that curbed government spending in terms of getting things under control. We're seeing no signs of that in a major way here in the U.S. at this time. And what that tells me is that while gold had this big pullback here and really bounced and then kind of went down, and obviously we know what happened in the 80s into the 90s, gold went way, way lower, it's hard to imagine that, yes, I think we'll get a pullback, but then it probably moves and eventually goes higher. Now, the question is, where do we look to buy? What are the charts telling us about buying gold? Well, the beauty of this is it gives us a really good basis for analyzing this from the 1979 move up and the correction back down in the early 80s. What we can see here is this move up here, we have this high, right? If we draw that across, what do we get? Look at this. When you retraced in the 1980 period, you came back to that previous high. So what does this tell us about buying in the current realm? It tells us that same sort of pattern. We take that high, we drag it across right here, and essentially when this does flush out, we have a decent chance of a pullback to about 3,500. In general, I never like to put my order right here because what if it doesn't fill? So I'm going to probably look between 30, basically below 3,600 to start accumulating. But that makes a lot of sense because if we look over here, what ended up happening after it retraced into that level? Let's go back to that. Look, you got this beautiful bounce back up. And so again, the idea is this ended up being that low, which again was that retrace, and then it moved back up. right? Now here in this situation, and again, there's no guarantees obviously, but if it does pull back in this range, my guess is eventually it actually makes new highs unless our government gets things under control a little bit better. But in the very least, we have our retrace flush out. Now you might be saying, why do the charts replicate, right? I mean, like, why is this so similar to what we're seeing now? And the answer is charts are made up of people, right? People buying and selling, essentially greed and fear. And so you're never going to see exactly the same. Like the consolidation over here, this was a little longer consolidation than what we saw in 1979. But the key is human nature doesn't change. Greed rules, fear rules. And so you're seeing the same metrics appear from the 70s to currently in human nature. In fact, someone just told me that in Australia, there's lines around the block to buy gold bars right now. And when I hear that, I hear bubble, short term at least high. And so just be aware of that same sort of mentality, the craze of gold. And I'm a huge long-term gold buff. I love gold longer term, but I'm also recognizing what the charts are telling us. All right. Couple other charts here, guys. We've got to go to silver here. Silver is correcting just a little bit today, just a small pullback. It's had an amazing run. This also has 9 weeks up. In all fairness, if gold pulls back, likely we'll see silver retrace as well. I still have this bigger parallel, which tells me gold could go as high as $60 to $62. I do think there's a level 55, 56 where there's going to be some resistance. But just keep in mind, if gold pulls back, silver probably pulls back as well. Couple final charts here is we always go over oil, natural gas, and then of course I want to touch on Bitcoin because that's a big one for us, especially based on what it's doing. Notice here on the chart of oil, great chart by the way for analysis. And so what you had here is you had this big up move, down move, and then this was a bear flag, right? Which that's a classic technical setup. Told you it was going to go lower. It did, and then it consolidated between this gap fill here and this upsloping. Notice each hit, rejected, rejected, broke down, and finally confirmed. What this tells me is essentially you're going down to this $55 per barrel level, then we'll have to reevaluate. But essentially it almost got there overnight. I'd look for around $55, and then we got to watch to see, does it hold $55 per barrel? And then lastly here, folks, natural gas, just before we get into Bitcoin. Nat gas here, bear with me as I bring up that chart. There we go. Natural gas continues to just chop here. There's not much new, and we kind of cover this every day. I love it when there's volatility in nat gas, and there can be some wild volatility in natural gas. But in essence, you have your support here right now, very clear, and then you have your X marks the spot. These lines go way, way back. They crossed, and it just rejected price. If you do break this 330 level, you're probably going down to the low end here around 292 or so. But for the most part, again, not much movement on natural gas. And then lastly, guys, Bitcoin. We got to talk Bitcoin here. So Bitcoin is at risk of confirming another major breakdown. And this, by the way, has me very concerned for the equity markets because the equity markets, as we know, this is a risk asset, probably riskier than stocks. So if this is dumping out like this, what does it tell us about the mentality, the psychology of retail investors or any investors? It says they're de-risking. And so Bitcoin, you could see, closed below this trend line. Look at the beautiful trend line right here to here to here and here. Hammered, bounced, now it's closed below. If it closes here, it confirms. That means it's headed down to basically 98 to 95,000. That would be your downside target here, where the next test would be. It doesn't mean it can't break there, by the way, but that would at least be your next level where you'd start as a technician to say, okay, is Bitcoin going to hold this? Maybe I'll even play it for a quick swing trade long, then I'll reevaluate. If you do hit that, you might even get a bounce back to 110 or so. But now 110, once you confirm below, 110 becomes a major ceiling. All right? So that's really what I have for you guys today here live from the Money Show. As always, folks, we love to give you guys chart analysis. That's what verified investing is all about. As I always say, if you find this interesting, all I ask from you guys is to share it with friends and family that you think would like this kind of stuff, where it's not so much about the hype on social media or the narratives on mainstream media. It's all about the probabilities and the charts. To me, that was the difference maker between me being a losing trader and a winning trader. You guys have a great rest of your day. Thank you so much for tuning in live from the Money Show. We'll see you soon. Take care.